For this video, let's discuss the mortgage crisis and the ongoing bank freeze in China and the United States. Follow the channel and hit the like and subscribe buttons to hear more about these subjects. When everything else is falling apart, why are we fixating on China? This is due to China's status as a global economic powerhouse. They want to replace the dollar as the international currency of choice. Their output accounts for 20% of the items we use regularly. There is no exaggeration in saying that they are on the edge of bankruptcy. As you could expect, this would have repercussions throughout the world. Many people think a real estate bubble has formed in China over the past few years. As a form of insurance, locals choose to invest in property. The housing market expanded by double digits yearly as a direct result of them. Furthermore, urbanization in most rural China and societal pressure to buy a house resulted in a significant relocation to cities, providing more fantastic opportunities and higher earning potential, raising demand for more and more projects have fallen behind schedule or been abandoned. So this is only the beginning. Those who buy mortgages have gone on strike due to a lack of money, even though it all started with Evergrande, which plunged into debt for $300 billion in 4 weeks. All homeowners with existing mortgage debts will be prohibited from making payments on the 20th of October until construction is resumed. Protests of a similar nature impacted around 320 projects in roughly 100 places, causing widespread market disruptions and prompting authorities to seize banks and developers. If China's real estate market were to collapse drastically, it might have repercussions in the United States. The real estate market in China seems to be getting worse rather than better. What steps is the government taking to stabilize the market? China released a statement saying they have strengthened regulation by monitoring client funds and ensuring timely delivery of new units, but with 96% of the Chinese population exposed to the real estate market and 13 million apartments stuck in the process, flow into other industries, including banking, has occurred. Protests took place on July 11 outside the People's Bank of China. Customers' bank accounts have been frozen since April. The administration blamed criminal gangs for the situation after the banking regulators announced they were investigating allegations of illegal financial activities that they estimate to have originated sometime in 2011. However, the China Banking and Insurance Regulatory Commission asserts that the banks in question originally baited their consumers with excessively high interest rates. The money is subsequently transferred illegally to criminal groups that are privately managed. If the bank engages in illegal or unethical behavior, its customers could lose everything. The Chinese people's loss of faith in the financial system is the country's biggest threat. Another issue for financial institutions is their widespread lending to the construction industry. An anonymous source has revealed that some builders have secretly fled the country with the necessary construction funds. Customers in China should expect a refund of roughly $15,000. It's possible, though, that more than this will be needed to win back customers' trust in the financial system. The result is a society where people are constantly on edge about the next bank run. It's like when you trusted me with $1,000 and asked me to hold onto it. However, I can turn around and give $9,900 of it to someone else. Someone who gives $810 to a charity is who? Who hands out $709 and so forth. That is, they are taking a risk that at most 10 consumers will all want their money back simultaneously. However, China started lowering these reserve restrictions in 2019 to free up more cash for spending. For the time being, this would prevent the economy from slowing down. If several customers demand their money back at once, this raises the risk of a bank run. People will forego borrowing money from banks if they lose faith in them. If people don't buy houses, builders stop making them. Additional time is added to the cycle because of this product. China has put off the inevitable as people pull money out of the system and hoard what's left. By reimbursing certain accounts, you are sending a message that you're engaged in international trade and may provide financial aid to struggling developers. They have cracked the case. However, that's not necessarily the case. The goal of this new fund is to accumulate 300 billion yuan. While the economy recovers, this might be enough to restore market confidence. A close source claims that the fund would be used to acquire half-finished residential developments and finish them off, as a part of a national initiative to boost the supply of rental housing to lease it to private individuals. How does this impact the United States? US investments in China surged within the last decade. The United States has over $118 billion in investments in China. But this is a tiny percentage of the total US portfolio. However, Chinese businesses have extensive holdings in the US market, and selling these assets makes sense in times of financial stress. Because of this, the stock market's volatility would increase dramatically. However, the United States population feels less of an effect than would be the case if, for example, the stock market were to drop dramatically. The Great Depression of the 1920s is a period for which you should have examples. We haven't had to worry about this for a long time, despite all cities demanding their money back. The situation in China, however, has been different. Their objective is clear: maintain market stability at any cost. However, without reliable oversight, many malicious actors are trying to exploit the current setup. This may only put off the inevitable for a bit longer. China's economic growth of 5% per year is seen as attainable. And it doesn't take long to see that the era of China's extraordinary economic rise is past, even in the best case scenario. Finally, the inevitable is here: a Chinese economic meltdown. I know it isn't very safe, but maybe you found this video at least somewhat informative. With any luck, you were able to glean some helpful information about how to weather the impending storm. If so, hit the like button and subscribe if you're a new viewer. With your support, we can keep bringing you articles like this one. Well, that wraps up this video for now. Maybe we'll see you in the next one.